Welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment, where he takes a viewer's email and tries to answer their financial question on the air. Let's take a look at the question today. How are distributions calculated on my IRA accounts, and who determines the amount I have to take out and when? I would rather defer the money until I need it later in life.
A lot of people would love to defer it until they absolutely have to have it.
Yeah.
But the government says, we've let you defer that all these years. Now we want our tax money.
Oh, okay.
So now they're saying, when you reach age 70 and a half, we're going to force you to take out a required minimum distribution. Now that is it's an amount, it's a specified amount determined by the IRS. It's on what they call the Uniform Lifetime Table. Now, as the client gets older, the factor on the table gets less, which creates more distribution. So the example we're going to give is if you are 70 years old and now you've reached a magical age, let's say you're retiring, you've got $100,000 in your IRA. Well, your factor that year is 27.4, all right? So you take the amount in your IRA as of your previous December 31st, you divide it by the factor, and it just so happens that comes out to be $3,600 and change. So it's about 3.65% at age 70 and a half. Same scenario at age 80, the factor is 18.7, and your distribution rate is 5.35. So as you get a little bit older, the factor decreases, and it increases the amount you have to take out of your IRA. As you get older, you take more out, and the government gets their tax.
They want the money.
Right.
Yeah, sure.
They want their taxes. Now, it's subject to taxation. Now, just because it's subject to tax doesn't mean that you're necessarily going to have taxation. There's a lot of people that have the ability to take their RMD out, and it doesn't affect their tax liabilities that much. It depends on every person's situation.
Sure.
But the rules are in place. They're determined by the IRS. The things to consider when you turn 70, if you turn 70 like in October,
right,
and you're not going to be 70 and a half until March, you have to, the rule is you have to take a distribution, the first one out, the April following your 70 and a half birthday. So in that scenario, if you turn 70 in 2/15, you're 70 and a half in 2/16, and you take one out before April, you're going to have to take another one out before December 31st. So generally, when somebody turns 70, we go ahead, calculate their RMD, and get that out.
Now, is it based on dollars that you have in this, or is this just a flat number for everybody?
And where does that come from, that number?
It's based on the IRS determines the Uniform Lifetime Table. The amount in your IRA the previous December 31st determines the amount that you have to take out that year, and the factor applies to that. And as you get older, the factor goes down, and you apply that, and your distribution goes up. So the things to remember, the dates: April 1st following your 70 and a half birthday. But if you wait and it's a crossover year, you'll have to take 2 out the first year and then 1 out every year after that. So normally to not do that, that creates more tax liability. Not to do that, we take 1 out the year you turn 70. So if you have a qualified plan at work, that has to be treated separately. If you have 3 or 4 different IRAs, you can combine it, and you can determine how much you take out. Roth IRAs, there is no distribution on a Roth. So this is traditional IRAs or qualified retirement plans. So bottom line, if you have questions, you can call me, call a professional, get some help in determining that. The companies that I use guarantee the calculation. If you miscalculate it, there's a 50% tax penalty on the amount you should have taken. So you got to be careful.
You really have to pay attention, because that could slip right by you pretty quick.
You really do, and you want to pay attention to those numbers.
Well, but this is the perfect. I mean, you've told me all of this thing, and I think at the very end I thought, I need to talk to my tax guy about this. And that, that's what you want. Talk to a professional where this is concerned. Talk
to somebody that can help you figure it out, but you don't want to miscalculate it. And that's why I like using companies that will guarantee the calculation.